Hello guys, a lot of things have happened with Royal Caribbean since my last video. In today's video, I'll give you guys an update on the company, on my position, how much cash they have left, and how long that could last. This video is full of important information about this company, so go and grab some popcorns, sit down and enjoy. We all understand the situation we're currently in. The economy is reopening little by little, but still the majority of people are only doing essential things such as going to work or going to the supermarkets. This is because the economy is reopening by phases. The phase we're currently in is people adapting themselves to the new normal on a daily basis, which is basically be able to go back to work, go to any restaurant, be able to go to parks or even beaches. Right now, I do not think people will think about traveling and entertainment until they feel comfortable with the current situation. Since Royal Caribbean has been forced to understand these phases, they have been trying to move forward with the small demand that they currently have by reducing their prices for bookings and extending their programs called Cruise with Confidence. For any of you that may not know, Royal Caribbean implemented this new program since a lot of customers did not understand what was going to happen with their bookings. This new program basically gives their customers the flexibility to cancel their cruise up to 48 hours prior to sailing. Now, customers have two options when canceling their trips. The first one is to get a cash refund, or the second one is decide to receive a full credit of a cruise fare for a future cruise through April of 2022. The amazing thing as a customer about this program is that obviously Royal Caribbean does not want to refund people's money since they need the cash and also need their customers to stay loyal to them. Because of that, if people decide to go with a credit for future cruises options, they will receive 125% of their money on credit. This program also works with new bookings, so basically you will be getting 25% more to enjoy on a cruise for doing nothing. Take into consideration that people asking for refunds are only 45% of them, which are mainly millennials. The other 55% are people asking for credits and are mainly baby boomers and families. Obviously, Royal Caribbean will not earn 100% of what the customer was spending because they are giving their customer that extra stimulus of 25%. The thing is that later on, that person will spend that credit back again in the company. Basically, the company is incurring the credit expense so they can keep a percentage of that revenue, which is better than nothing. Last week, they explained in their last press release that they were proactively enhancing liquidity and preparing for new normal. As I said before, prior to COVID-19, the company started yet in a strong booked position and at higher prices on a prior year comparable sales. Nowadays, their bookings for the rest of 2020 are just meaningful, but still their booked positions for 2021 is within historical ranges compared to the same time last year. The good thing about this is that the vast bulk of 2021 bookings are new bookings, not people using their available credits, which means that a lot of people is ready to hop on a cruise next year or they just want that extra 25% for future cruises. As of March 31st, Royal Caribbean already had $2.4 billion in customer deposits. Take into consideration that $800 million out of that $2.4 billion were future cruises credit related to previously announced voyage cancellations through June 11, 2020. Basically, the company was giving away $800 million to keep their customers and see them booking again. In my opinion, that will be definitely reflected in the revenue throughout the availability of the Cruise with Confidence program. Still, the company obviously continues to take future bookings for 2020, 2021, and 2022 and receive new customers' deposit and final payment for these bookings. Obviously, since they had to suspend its global cruise operations, they have taken significant action to enhance its liquidity and secure additional financing. Remember guys that during hard times like this ones, cash is king and they need to maintain as much cash as possible to be able to sustain. And how they did that? Well, by reducing operating expenses such as reduced crew payroll, food, fuel, insurance, a lot of marketing and port charges. They also were able to reduce capital expenditures by $3 billion for 2020 and $1.4 billion for 2021. Then they increased their available cash through financing and reduced their workforce by approximately 26%. On May 19th, Royal Caribbean announced that it has commenced a private offering of senior secured notes to be issued by the company in a separate series of notes due in 2023 and 2025. Also announced $800 million in short-term debt amortization from some export credit-backed facility. So they increased approximately $4 billion in additional financing through the secured bonds and credit lines. Something that I really like is that they announced that the last thing that they would do is to dilute their shares. That is something that Carnival already did, and people did not like that a lot. Because of that, they prefer to keep offering new bonds or increase their cash through additional financing. Obviously, keep offering bonds with interest that they are able to pay. Royal Caribbean is estimating their cash burn to be on average $250 to $275 million per month during suspension of operations. That includes ongoing ships operating expenses, administrative expenses, debt services expenses, hedging costs, and some necessary capital expenditures. It does not include cash refunds of customers' deposit as well as cash inflows from new existing bookings. So basically, as of March 31st, they reported a total of cash and cash equivalents of $3.9 billion. As of April 30th, only 1 month later, they had $2.3 billion left. On May 19th, the company completed $3.3 billion in senior secured notes offering, which was offered as follows. $1 billion with coupon of 10.87% due in 2023 and $2.32 billion with a coupon of 11.5% due in 2025. They already spent $2.3 billion to repay a loan agreement they had with Morgan Stanley and kept only $1 billion in cash. So basically, they had $2.3 billion left from cash and cash equivalents plus $1 billion from the notes they offer, which is a total of $3.3 billion in cash. I would expect that they already spent more of that cash, so in my opinion, they currently have around $3.1 billion. If their cash burn is an average $263 million per month and has available $3.1 billion in cash, then they have more than enough liquidity to maintain their company without revenue for almost 12 months, which in my opinion is incredible. Also, they announced that they will not pay dividends or engage in stock repurchases. The company is adapting to the new normal in different ways. For example, they are considering reopening their offices here in Florida sometime next month. But their offices in China have been open for almost 2 months. As their CEO said, it all depends on when the pandemic started in different areas. So basically, they could start sailing in other countries like China way before starting here in the US. Royal Caribbean is creating a strategy to start sailing again at the beginning of August and are evaluating every option. Something that is important to know is that their new boats just need 30% of capacity to be break even. Well, with old boats, they need almost 50% of capacity. Still, they won't be coming back until they know that they have done everything to protect their customers and crew, because it would be a chaos to start sailing earlier and then start to see a lot of COVID-19 cases on board. And now let me give you guys an update on my position. I'm filming this video after market hours on May 27th, so basically Royal Caribbean stock was up almost 10% in a day because of people thinking that we will open the economy or, well, start sailing and start traveling earlier than expected. And it's currently at a price of $52.22. If you've seen my last cruise line industries videos, you would know that I started investing in Royal Caribbean and Carnival way before COVID-19. So I started my position with Royal Caribbean when it was at $99.80. Then I bought again at $95 and at $90 on February. I was buying at those prices because the stock was down from $130 something. So for me, that was an excellent pricing. Then I decided to stop buying because I saw that the stock was going down really hard and fast. So I stopped and then bought again on March 23rd at a price of $24. I do have to say that I was very lucky buying at these prices. Obviously, there are people with better average costs than me, but I started investing really early and I'm actually happy with my position. Obviously, I regret not buying more at $24, but that is easy to say when you see that the stock is already over $50 again. I do have a lot of faith in this industry and I believe they will be able to come back stronger after this. If you would like me to do a video analyzing Carnival Cruise Line like I did with this one, leave a comment down below. I do recommend you go and watch this video where I analyze e-commerce businesses or this whole playlist. If you enjoyed this video and found a lot of value, consider subscribing and smashing the like button for the YouTube algorithm. Thank you and see you next time.